Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Long ago and far away, there wasn't the internet, there wasn't Adobe PDF. There was a guy pushing a trolley with paper research, and it was literally half a hockey goal high. Buried in that on a given morning was 25 or 30 pages from a firm called C.J. Lawrence. And my recollection is it was within a green ink. The titling was within a green ink. Yardeni Quick Takes is in the same C.J. Lawrence green. And we are honored from the span of those multiple decades that Ed Yardeni joins us this morning. I can't say enough about Yardeni Quick Takes. It is the read to give you confidence and push away your fears of the stock market. Ed Yardeni, what's there to be afraid of right now in the stock market?
Well, I think the valuation is a bit of an issue. I've been forecasting 5,400 for the S&P 500 by year end. My concern is we might get there by mid-year or earlier. I'm forecasting 6,000 for next year, and I'm concerned we might get there by year end. So I'd like to have a nice leisurely bull market here, not to something like we had in the late 1990s.
A guy at Yale, where you got your parchment, I think his name was Schiller, used to talk a lot about exuberance that was out there. What is the character of our exuberance within the Yardeni and Campora bull market?
Well, I think we can look back to the 1990s as a possible model for the environment we're in. If that's the case, then the next question is, are we in 1999 or are we in something somewhat earlier? I think at this point, we're more like 1996. Remember December 5th, 1996, when Alan Greenspan had that famous speech in which he did a Hamlet on us. And he said, how do we know if the market's irrationally exuberant? And I think we're at that point now where everybody seems to be asking, is it rational exuberance or irrational exuberance?
So, Ed, when you look at the elements within the market, what looks most rational? What looks most irrational?
Well, the valuation multiple on anything related to artificial intelligence certainly is very high. The so-called Magnificent Seven, their multiple has been very high. They're becoming more rational, actually, because some of the Magnificent Seven aren't so magnificent anymore. We've seen Apple underperform. We've seen Tesla underperform. So it's a healthy thing to see that the market isn't just willy-nilly going across the board and marking up these mega stocks, these Magnificent Seven. I think clearly outside of the stock market, Bitcoin has had a heck of a move. I think it's having a heck of a move down this morning, but there's certainly signs of speculative excesses.
Ed Yardeni, as an edge of fossil like me, do you believe that there's an underlying under Bitcoin? Is it an actual tangible investment?
Well, this will probably get a lot of people mad at me, but I mean well, and that is I view Bitcoin as digital tulips. In other words, it is kind of like what happened in Holland with the bubble in tulips, but there's a huge difference here, which really presents the possibility of much higher upside, which we've already seen, and that is the notion that it's a global market and it's open 24/7, and we're talking about tens of thousands, hundreds of thousands, millions of people playing in the Bitcoin marketplace. So I have no idea how high it could go. I have no idea how low it can go. I'm an old-fashioned guy like you are. I need earnings. I need coupons. I need something I can value. I need rents, something I can value, and I don't have that with Bitcoin.
Digital tulips that have a structure of a a investment tool underneath them with all those ETFs, right? And also a digital tool, a digital tulip that is going to also have, what's the verb for having? To have?
I don't know. You went to the fancy school.
H-A-L-F-H-A-L-P-E.
Scarlett, Greifeld was on yesterday, and we're talking polka dot and Doge. And I'm trying to have a serious conversation with Miss Haverford about polka dot and Doge.
Yeah.
This is nuts.
Right. This is nuts. Okay. Yeah. So, Dr. Ed, let me go back to Bitcoin, because there are a lot of things, a lot of market structures to support this digital coin right now.
Sure.
When we see the halving in April, do you anticipate any kind of correlation with what we see in equities? Because a lot of that bullish sentiment tied to Bitcoin has spilled over into equities or vice versa.
Well, I think you're right. And I think where Bitcoin's enthusiasm has spilled over is clearly into gold. I mean, gold was kind of sitting there doing nothing. And then all of a sudden, maybe some of the Bitcoin enthusiasts concluded that they haven't owned enough of it and it's too expensive, and they want to look for other areas to diversify. So gold has been a winner, though gold mining shares haven't done as well. But look, I have to admit, I've got some FOMO every now and then when I see this Bitcoin going up to 70,000. I said, man, I knew about it at $1, at $10. I knew about it at 100, at 1,000. Why didn't I just buy a couple?
And you have huge response on YouTube this morning worldwide. People are listening to Edward Yardeni. I want to go to the x-axis, the theta, whether it's just a normal x-axis or, dare I say, we go logarithmic. You've had the courage to go out to SPX 6000, and I think you've put a 25 handle on it. Why can't Ed Yardeni model out to 2026?
Oh, actually, I have already. I'm glad you asked me, because just recently we were talking about 6,500. In terms of earnings, the underlying earnings, last year we said 225, and there were a lot of people who were using 180 for earnings per share for the S&P 500. And we came awfully close. $222 is what the S&P 500 earned last year. This year, we also have bullish outlook for earnings, 250. And then the year after that, in other words, 2025, we're talking about 270 and then $300 a share for 226. And we think that will accommodate 6,500 on the S&P 500 by 2026.
Ed,
glad you asked me.
Thank you for this I'm trying. Ed Yardeni, thank you so much for this conversation, folks. Sarah Hunt with us, Chief Market Strategist at Alpine Woods Capital Investors. How did we get from Dow 8,000 or Dow 6,000 for the gloom crew to Dow 40,000? It's just the growth of the nation, right?
It's the growth of the nation. It's the growth of the money supply. You had a huge amount of money come into the system over the last decade that started in the financial crisis, and it just went right up until COVID when it was supposed to pull back, and then we flooded the system with more liquidity post-COVID. Right. So a lot of this is money looking for a home, right? So that you had no fixed income for a while. So where were you going to put your money? You were going to put it in equities.
I'm going to speak for Roger Ferguson, which is always hazardous because he's a giant. He was at TIA. He's our number one person in retirement. I take immense umbrage with people criticizing the Ute of America like Scarlet Fu, saving for retirement, who said, I'm going to buy stocks. And that's supposed to be a bad idea. I don't agree with that. Stocks is how you do this, right?
Well, stocks is where the liquidity went. A lot of that liquidity went into stocks. A lot of it went into real estate, and it went into real estate and pushed real estate prices high enough to the point where you couldn't necessarily afford to buy a house. Like, people talk about the affordability question all the time. It's not just mortgage rates, it's the level of pricing. And the level of pricing in the housing market right now is very high. It has not come down commensurate with interest rates going up.
We just talked about that.
So absolutely, then why wouldn't I want to put my money in an asset class that has done very well historically speaking, and is also one of the few places I can do it incrementally.
What's great is if you take the 25-foot Christmas tree out of the den, the price of your house, Scarlett, will go up $100,000.
Well, I have to get that thing out first. So we talk about moving into equities that's driven by liquidity. In 2024, how much of that liquidity is now going into Bitcoin? And is that competition for equities?
I think it's just one more place where people can, one, put their opinion on, the global monetary system and fiat money, right? People look at gold and Bitcoin in a similar way for that reason, even though whether or not they actually act that way is a different question. And in some periods of time they will, and in some periods of time they won't. But I think that you still don't have, fixed income is now a bigger competition for equity money just because you have an interest rate where for nearly a decade you did not. So I think that there is, that change is also there, but you've got companies with enormous cash hoards that are looking to put money to work in a variety of ways, and some of the fixed income is going to get absorbed by that. Think about Apple's balance sheet and Nvidia's balance sheet. We've talked about how enormous they are relative to small economies of other nations. So there's a lot of, there is competition, but there's still a lot of money in the system, and this is where you're starting to see that wage hike situation going on like you just saw in Japan.
Okay, so money in the system, we're seeing that certainly with this past earnings season when the buzzword or the theme really was free cash flow. Everyone was trumpeting their free cash flow. Managers are getting paid based on free cash flow. If you think about David Zaslav at Warner Brothers Discovery, the use of cash, whether it's to plow it into buyback programs or in some cases starting a dividend for some of these growthy tech companies, how comfortable are you with the use of cash, and would you want to see more of it diverted to dividends versus buybacks?
So we like capital allocation that's giving back to shareholders if you can afford it, right? So that's the big question. They're trumpeting cash flow because if I can afford to raise my dividend and or I can afford to buy my stock back, that tells me something about the underlying business, as opposed to I can only afford to pay a dividend and it's lucky I can pay that dividend. In some cases, I have to borrow to pay that dividend. You don't want to see that as an investor. It happens, but that's not what we're looking for in general. But I think that there is a trade-off between those two things. I would argue I like dividends more than I like buybacks, but it does, the same idea is that it's giving capital back and or to the extent that it's shrinking the share count, making your metrics look better too.
How do you like dividends if I'm paying a tax on it?
I don't like paying taxes on anything, but I still have to pay. That's part of the zeitgeist. If it's a buyback and my capital gains go up, then I've got taxes on that side too. Taxes are going to be part of the equation no matter how you slice it. Yeah.
Okay, I want to talk about April 25th, and I just randomly picked it. I picked a big ugly company that's doing better than good. Microsoft announces earnings basically a month from now. Isn't the heart of the matter the stocks we've chosen to be in? We believe the cash flows will be there. Do you see any risk of cash flows diminishing in the first quarter report or the second quarter report?
This is one of those areas that we keep talking about, which is that the largest companies now are those companies that have some very good base cash flows. And so could there be a volatility within a quarter to quarter? Yes. Is there a long-term issue with the cash flow of something like Microsoft right now? I don't think so. And I think that's one of the reasons that these large dominant tech stocks are remaining large and dominant, because the cash is there. In the last run-up that we had, major technology run-up in the early 2000s, like that, the cash wasn't there in a lot of those companies. The stock prices moved, but they weren't making any money. A lot of these companies are making a lot of money right now, and I think that that's one of the reasons that they end up remaining dominant.
Does a lot of free cash flow repel activist investors? Or does it attract them in a way where they're thinking, there's something more here?
I think that it depends on what management's doing with that cash flow and whether or not they think they can do a whole lot of a better job, right? So that's a question of what you're doing and somebody looking at that going, I could take that cash and do a whole bunch of other things with it.
Sarah Hunt with us here, really interesting discussion here in equities. What's your portfolio turnover rate? How much are you moving in and out of stuff?
It is not that high. We tend to buy and hold things for longer periods of time, right? So, I probably could give you a number off the top of my head, but it's going to be somewhere in the 30 to 50% range as opposed to a higher range.
Do you rebalance?
Yes, we rebalance, but we also don't want to cut our winners off too early. So it's really a question of, if I'm looking to rebalance, why am I looking to rebalance? Is it because everything else has gone down, because something's gone up so much that now I'm afraid that it's too big in the portfolio and I don't want to take a single stock or a handful of stock risk that's too big? But that's the problem with underperforming the S&P last year, right? Because the seven biggest stocks were all the performance. So if you rebalance too much, you're trailing those indices.
Talk about overseas markets. Is there anything attractive about them right now?
We tend to be U.S.-centric in terms of our investments. There are a lot of ways to play overseas markets with U.S. companies. I think that for us, the difficult thing is seeing why another economy is going to either outstrip the U.S. or do something more than just have a giant move. Now, Japan had a big move, but the currency had a big move. So if you're not in Japanese yen, that big move doesn't necessarily feel as good unless you've completely hedged that move out. So for us, we like to look at things we like to look at ways of playing overseas markets with U.S.-centric stocks.
Sarah, thank you. Sarah Hunt, we'll have her in often here. Just a great guest on the realities of a portfolio. This is a joy. Paper Soldiers. Don't look for the movie. There it is. I'm sure she hasn't sold the movie rights, but it's under consideration. Saleha Mohsin, and the reason we're talking to her is because she's a real journalist. There's this rumor I'm a journalist. Guess what? I'm not. Only Marty Schenker thinks I'm a journalist, my great advisor here at Bloomberg. Saleha's the real deal, and she's gone out and put together this soap opera of your United States dollar under risk at Treasury, given the crises that are out there. She runs our Treasury covers in Washington. The book is a piercing 200 pages, How the Weaponization of the Dollar Changed the World Order. Saleha, congratulations on the courage on writing this. When Tim Geithner reads this book, when he reads Paper Soldiers, how upset is he going to be?
I'm so excited. This book is coming out on Tuesday. Tim Geithner is actually going to be excited, and not because of how he may or may not look at it. My conversation for the book with him came right before, about a month before the Russia invasion in Ukraine, a month before those historic, almost earth-shattering sanctions that the U.S. led the world on applying on Russia. And somehow he was so pressy in our interview. I asked him all of my questions. He answered everything patiently. And then he held me back at the end. And he said, Saleha, when you're writing this book, I want you to think about how the next generation of policymakers at Treasury are going to have a different America that they're facing. And that shifted the lens through which I was looking at the
So I sat across from Parliament with John Taylor, who was at a G7 meeting for a very ill Jon Snow. And they were at the time with the fear of terrorism, foreign exchange transfers as well. I want you to sell to our audience on Apple CarPlay and YouTube the why of this book. They're interested in the Fed, the Fed, the Fed, the Fed. Why does Albert Gallatin's Treasury matter in our nation's security?
The world runs on US dollars. The Treasury Department is the steward of the dollar. The dollar touches everyone's life. You could be a cocoa bean picker in Ghana. You could be an oligarch or a business tycoon somewhere, and you need the dollar, the global financial system, to make any kind of transactions to keep up your livelihood. The U.S. has used that dollar to protect itself. After 9/11, the war on terror did not start with military tanks rolling toward a country. It started with the stroke of the pen when George W. Bush gave the Treasury Department fresh authorities to track money, the money flow of terrorists, and to use economic sanctions. So the dollar gets us health. It gives us the pursuit of happiness. It gives us connection to the world, and it also protects us.
And Scarlett, as Valerie Giscard d'Estaing said in the great Barry Eichengreen at Berkeley, it is our exorbitant privilege.
It is our exorbitant privilege, and it's one that we don't have to think about a whole lot when it comes down to it, because day in and day out, Saleha, most Americans aren't really concerned with the relative strength or weakness of the U.S. currency unless they're traveling abroad. You mentioned an oligarch overseas, you mentioned a foreign business owner, but for ordinary Americans day in and day out, it's not something we have to trouble ourselves with. In your reporting, what do you think will most distress ordinary Americans about the dollar and how the government has weaponized the dollar?
I think the most distressing thing is what's playing out every day across the country and in Washington. It's the self-inflicted wounds that we are giving our country, and that is actually damaging the U.S.'s dominance in the world and the dollar's dominance in the world. If the U.S. can't get its fiscal house in order, make sure its electorate feels heard, feels happy, becomes united, then dollar dominance and American hegemony around the world is not going to last.
Okay. The U.S. Treasury, as you know, has always pledged allegiance to a strong dollar. They all answer that they want a strong dollar. obviously we know it's much more nuanced than that. What are they really saying, Saleha? Or is that statement nothing at all?
Now it's really nothing at all. It was Treasury lore. It was a mantra from the Bob Rubin administration. At the time, it meant that we are relying on our economic strength to rule global commerce and to run our own economy, and it underpinned globalization. And now Trump started a movement to look inward, more populist policies, and Biden has carried that forth. Buy America. Friendshoring sound a lot like Make America Great Again and America First. And so we are shifting toward a policy where there's no real dollar policy, because no one wants to admit to a weak dollar policy, because with one hand, a weak exchange rate is good for manufacturing. With the other hand, dollar dominance and hegemony is really good for America.
Saleha, off of Paper Soldiers, and I guess it's after the book, it'll be for your second edition, your sequel, I should say. How's Yellen doing? Has she been a successful Secretary of Treasury?
She's still there. She has navigated through a lot. She had to be there to oversee the execution and implementation of some really complicated, huge sanctions on Russia and take a lot of the flack. A lot of people these days are wondering whether those sanctions really worked or not. The oil price cap was a really big deal for Janet Yellen. And of course, inflation. She was one of the people who was calling it transitory while millions of Americans were pain, and then it turned out to not be true. But I think we still need some time to know how her legacy will stand after her tenure.
I can't say enough about this book. It's a little book, but it's a powerful book. Paper Soldiers, How the Weaponization of the Dollar Changed the World Order. Saleha Mohsin. I just can't find the words for the dialogue and the velocity through it of all these people worrying about Crisis 1 and Crisis 2. Saleha, thank you so much for Paper Soldiers. She is with Bloomberg News in Washington. Your daily look at the front pages without royal coverage. It's from around the world except the UK. Lisa, what do you got?
All right, we're starting with the Wall Street Journal. Apparently, there is a fake Bill Ackman that is scamming investors out of millions of dollars on Facebook. So the problem is that the real Ackman can't do anything about it. Okay, so his company has found more than 90 different ads that are impersonating him. One of them promised annual returns of 125%. Another a 25%. Exactly. Another a 25% return in a week, and told victims to hold these 3 stocks and you'll be a millionaire.
So what are the entities doing? I mean, so he can't go out and do it.
He can't do nothing about it. And that's the problem. It's not just Ackman. I mean, Cathie Wood's ARK Investment Management, she had the same problem.
Scarlet Fu has the same problem.
Scarlet Fu. And a lot of people, even my own brother-in-law had his Facebook account taken over, and he can't do anything about it.
What's Facebook doing about this?
They're doing nothing about it, and that's the problem.
Okay. Full disclosure.
You're sending out stock messages when someone complains.
I have a secret account on Instagram, but I had to leave Instagram because Instagram wouldn't fix the problem.
What happened when you tried to contact them?
Yeah.
Oh, it was great. Bloomberg, we have a whole team here that does this at Bloomberg, like any other firm. But the answer is, you telling me about Mr. Ackman, and I'm saying, okay, Facebook, can you fix it by Friday, 12 noon? Don't tell me they can't.
Well, they can in certain instances, like they have, but the problem is that more just keep popping up. So once they delete a few more
Bill Ackman with 2 N's or Bill Ackman with 3 N's.
It just continues and continues. So
next,
it's a tough one. But the red flags, yes, you have to be aware of those red flags. This is from Bloomberg Law. It's kind of, I have to kind of dig into this one. They're saying new lie detecting AI for job interviews risks violating some old laws. This was a case brought over in Massachusetts. The use of artificial intelligence as a lie detector when people are interviewing for a job. So this is the problem. This was a court case with CVS Health. The person said they used this video interview technology that was developed by a company that reported these job seekers while they were answering questions. They then took that video and sent it over to an AI company that basically starts to interpret how the people are reacting. So it's giving them their emotions. It's making an assessment on the person from that, information.
This makes me feel uncomfortable.
Yeah, so it's like you're being recorded and then you're having AI tell the company who you really are.
Who trained the AI?
It's very.
And to bring it to the real world, Adobe, I think this morning was down 10% or something.
Yes.
And there's some financial issues, but also there's this okay, when's the AI click in? And I really wonder if that's when we look ahead, is that the discussion?
Is this the best use of AI? Is this what we want the AI to be used for?
Right, that's a good question. That's a great
It's one thing
question.
to make things more productive and more seamless, but is this the seamlessness we're seeking?
Right.
Maybe Mnuchin will make TikTok the new AI. Next.
Okay. Wall Street Journal, luxury resorts, they are ramping up their kids club. They're going all out because more families are traveling. So you have accommodations that start about $1,400 a night. You have places that offer kids programming like Spanish language lessons. They can learn Spanish while they're on vacation.
I don't think the kids want to do that.
They can take dance lessons. I think kids just want to go in the water and play in the pool. I don't know. But they're doing it's like kids clubs on steroids. That's what they're calling it. So.
It's a huge deal.
Yeah.
And to give a snapshot into this, it's cheaper for me. I'm leaving for Paris tonight. Mm-hmm. It's cheaper for me to go to Paris than to go to some resort with kids clubs.
Yeah.
Because the key number you just said was $1,400 a night. That's cheap.
That's cheap.
Trust me, that's cheap in prime season, the Caribbean. And it's gone up from the pandemic. I had the last plane out of Jamaica, literally. When the pandemic collapsed everything. And I would say since 2019, it's gone up 80%, I'm guessing, 80.
That's pricing power.
And it's all, talk about pricing. And every unit sold. It's like, I'm sorry, Mr. Keene, we can slip you into Jamaica in July. Yeah. That really works out. But this goes to the real estate, Scarlett, you were talking about. I'm sorry. Yeah. I'm looking around and it's a boom economy.
Everyone's trying to get into the towns where the schools are good so they can set their kids up so that maybe one day their kids can have a similar standard of living that they enjoy right now.
Yeah, I would say that's part of it. What do you got? You got something?
Last one, Taylor Swift.
Oh,
of course, it's a Friday.
American
royalty.
As you put it. Well said.
So they got a special treat. Disney Plus, remember they're going to stream her concert. It was supposed to be tonight. Well, they did it last night.
What?
At 9 p.m. So all the Swifties.
Was that a surprise?
It was a surprise. The Swifties they're probably a bit tired this morning because they stayed up late to watch it. But, Disney reported paid like $75 million for those worldwide streaming rights. So it went off last night. They had a few extra songs in there. And, it was like a special treat for them. So we got a day early.
Do you have a Swiftie in your family? Tom?
Oh, yeah.
Yeah. Hardcore.
I think every family does. I've said this before. There's a spectacular video of her with the guitar, and it's a number of years ago, at the Bluebird Cafe. The sound's terrible. The mic is terrible. Her guitar's in tune, I'll give her that. And she literally just walks up there and sits down, and seeing her in really difficult conditions, she's the real deal. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.